Good morning, traders, and welcome to the weekend update here for the weekend of December 14th, 15th. And I want to run through the current open positions for the Trade Alert service. If you want more information on the Trade Alert service, I'll put a link in the description down below. But this is where I share trades that I am making, and I do an opening video that shows why I'm opening the trade I'm opening. And then any adjustments I make where I lock in some profits, things like those along the way, or I open up a new trade that kind of complements an existing trade, all of that will have a video that will come with it as well to the members of the service. It explains why I'm doing what I'm doing and how I'm doing what I'm doing. So let's get into it and take a look at our current positions. So let me open up my little drawing tool here. So the first one here, this is an Oracle. This particular one is an Oracle calendar trade. It started off actually as a diagonal. And as Oracle moved on us, Oracle moved down and I ended up where I rolled this short put up a week in time. Now, I may very well need to do that again here this next week. The reason in this particular calendar that I put my long much further out in time than my short is to give me the opportunity to roll this short, roll it a couple different times in order to pick up additional premium. That's why this is my favorite earnings trade, a diagonal or a calendar, because it gives me ways of managing that position as opposed to just a condor or a butterfly around earnings. Then this particular position is, again, one of my go-tos that I love, which is the butterfly. This is the butterfly over here too. The thing about these is you'll notice that as our market has shot back and forth here quite a bit over the past couple weeks, these butterflies just sit there and they don't do a great deal except slowly start to drip some profit into there. This T0 line just starts to mound up over time. And I'm just looking for that thing to get up into that 10, 15, 20% range or so. And then I'll just take it off and move on to the next one. So again, those are the two butterflies right here. That's my standard go-to trade. Anybody wanting more information on the butterflies, I do a complete class on the deep dive butterfly. And for that matter, the deep dive calendar and diagonal. And I'll put both of those links down below as well. Then this particular position here, FTNT, this is where I'm trading the wheel. Now, this trade has been ongoing for some time, almost half a year now. I have rolled my puts up on a monthly basis on this trade, continuing to bring in additional premium. So this is a trade that, again, ultimately, I wouldn't mind owning the stock FTNT, but this is my way of showing how I can get into that stock without just jumping out and paying for it. I can actually get paid to place orders to get filled to own that stock. I can sell short puts and I get paid every time I do that. One of these times I'm going to get filled, I'll own the stock, but my cost basis then will be significantly less because of the amount of money that I've taken in along the way. Then this position is a leap position in SQ. I bought one long call over a year out in advance, and I'm just waiting for this to continue to rally higher, and then at some point, I'm going to start selling calls against that position as well. And then the final position here is waste management. Now, this is a short-term directional position. So what do I mean by a short-term directional position? Let's come in here and we'll take a look at specifically waste management. And you'll see that one of the things here on waste management is that it had pulled back pretty significantly here, but it pulled back right into what I consider to be a support zone. So the reason I did this particular position in this area is that I'm thinking that there's enough support here that this thing is likely to bounce. And I always try to look for at least a 3-to-1 reward to risk ratio. So what do I mean by that here? I'm looking for a stop. This is going to be a tight stop. You can see where that dashed line is drawn in there at about, I think that's about 211.50. So that's my stop. If I come down to there, that means I broke the lows, these prior lows. And that means that this area may not hold the way I think it was going to hold. So that stop is a pretty tight stop. Again, it's about a 2-point stop roughly down. But look at the upside potential I have here if I'm right and this bounces. If this bounces, I would expect it to bounce maybe back up into here into the 222 range or so. So basically, I've got about 10 points of upside. I only have about 2 points of downside. So this gives me roughly a 5-to-1 reward to risk ratio in this trade if my premise is correct. That's why I'm in that particular trade there. All right, everyone. So that wraps up the review of our current positions for the week. Now let's go ahead and move on to some technical analysis of our main indexes to see what we might expect for the coming week. All right, traders, so let's take a look at our charts and what we might expect in our markets in this coming week. So I'm still optimistically bullish, but I have to have a little more caution because there's some Fed announcements and things like that coming up this week. But as we look at the technical analysis of our charts, we can see all these places in here where I've drawn in support and resistance lines as I see them looking at a daily chart. So based on this, if we look at this chart up here, I'm expecting that, again, we're probably going to largely stay in that range. At least at this point, I'm guessing maybe till the end of the year. There is usually what's called a Santa Claus rally. I went into that in last week's video in quite a bit of detail about why that tends to happen, and it has to do with hedge funds putting on what's called window dressing. But at the end of the day, I'm expecting that we're probably just going to chop a little sideways here, or maybe we might bounce to new highs. You can see that we're very much continuing to respect this long-term channel here. Now, in addition to that major channel, we also have a little bit of a tighter uptrend line that I can draw essentially in that range. So if this were to break here, maybe it comes back down to that lower part of that new uptrend line or that steeper uptrend line. But again, overall, I'm looking for this larger channel to remain in place. Right now, just anticipating a little chop here at the top. Let's take a quick look at the volatility index on the SPX and see if that gives us any different clues. So the volatility index does not. It's down here very low. So no real volatility in our markets right now, which essentially means that people are not really going out and buying insurance on their portfolios. They're not rushing out and buying a bunch of puts thinking that, oh my gosh, our market is going to tank. So because that's not happening at this point, that kind of tells us that there's not a great deal of fear in the market right at this time. And then we can also take a look at the Russell index, and this is the RUT. The RUT continues to also maintain its nice upward channel. This is that long-term channel that continues to be in play. And then we can even make a case here possibly for, much like in the SPX, a little bit of a tighter uptrend. And in this tighter uptrend, if we take a look at that, we're essentially forming a wedge pattern. Wedges often break out to the upside as well. I'm not anticipating this breakout anytime soon. I'm anticipating that we might pull back down into here, rally back up. Again, I'm envisioning a wide channel here for the foreseeable future. And RUT did hit, this bar up here was all-time highs on RUT. As you recall, in last week's version of this, I pointed out that we were coming right up. We were right at the top of that. So I was anticipating a bit of a rollover in the RUT as well. And again, that rollover probably maybe down into this area. Seems logical on that. That's where I expect RUT. And then let's see, last week I was a little unsure as to what is the VIX symbol, the volatility symbol for the RUT. I thought it was RVX, but I wasn't getting to pull it up. It is actually RVX. There's 2 symbols here, 3 symbols with RVX, so I just need to select the right one. So this is the volatility on the RUT index. And again, very similar thing here. You can see that the volatility of the Russell index is also quite low. No real expectations, no real fear building around that Russell index at this point. That's the wrap up of the market review for the week ending December 14th. Take care, everyone. Have a great holiday season.